Hi, my name is Ernesto and I'm a Forex algo trader with years of live trading experience and positive results using Statistical Edge and EAs. I'm one of the best retail algo traders in the world with a solid tracking record you can verify, and today I want to share my knowledge and connect with more traders so we can grow together. So let's watch history together. As you can see, gold, this is live at least at this time, not at the time of the video, but today is Friday, so most likely at least we have 23.23 as the gold all-time high. As you can see, we have a very big week after NFP. Actually, NFP kind of looked bearish. We had yesterday a very big two very big retracements, but especially this one that marked 305. I managed to sell 304 and close around 60% of the profit in this area, so I didn't took back the retracement. I traded after NFP and one account before NFP, so I really didn't trade the whole move, and I'm not trading currently this spike. I'm safe because as you can see, this is a very volatile move, so risky to have your account trading here. But today we're not really analyzing the XAUUSD price or the all-time high. I'm just showing how crazy it's been for the price to keep breaking all-time highs this often, because usually all-time high was a zone that was very respected. As soon as you touch it, it went down like very we could say quick reactions to major zones like all-time highs, but now it's just like a new resistance that gold is finding like a challenge, and it's breaking it every time. So the idea today will be to continue with the model. As you can see, I'm breaking the account at one point. This is 2004 to 2009, and in 2009 I'm having an issue when transitioning. I'm not closing some trades, so I need to check that will be the task for today. I need to manage. As you can see, I have this green line. Let me open it. This area means that I'm having a lot of orders in profit, but I'm not closing them. So there's a lot of stuff yet to do, because I was mainly managing the micro ranges. So this is a very macro range, so I need to pay attention to that. And as you can see, 2004 to 2009, it's already managed. It looks very good and very clean. As you can see, 172% profit versus 40% max risk or max drawdown. Very clean, because we managed to trade 2006 and 2008 with no real issue. Like absolute drawdown is 21%, meaning profits are taking half of the total risk or protecting the total risk. In case you are not compounding, you're using the profit as equity protection, means you'll be in 20%, but I always go with the 40% to keep it safe, you know. So the idea will be to have first to manage to pass from 2009 to 2010 with no blowing, and then I'll manage the risk for the biggest ranges like 2008 and 2011, because this shouldn't be any issue. And after that I'll test 2004 to 2014, so I can test the 10 years, especially 2013, that it's also another very big range. So let's go to it. Let me put some music, let's chill and backtest. Okay, so we are back. I have here two different charts. Also, I have here the terminals. The only difference is I'm here selecting the ranges with the worst close. As you can see, I narrowed a little bit the total range. We can say the total range is 10 years. This is the first one, and the second. We have the first one with a very clean, in total is 70% drawdown. It's recording 43% more or less, because we're using profit as well. The EA is making profit, so it's helping to, it's not really helping the account because it's not needed. We're not getting the 100%, but in case we need it, it's there. So that's why the tester is taking the max drawdown as 42%, and we can confirm with the absolute drawdown of almost 15%, we could say. What's the difference between absolute and max? Well, absolute is the amount your initial investment, in this case the 100k, how much of risk that original investment had. So before closing any profits, you had a 15% drawdown, and after that you close profits, they were adding up to the initial investment, and that's why the 42% is not recording. Well, that's why the maximum drawdown is not recording the total 70% move, because you have that 15% more or less acting as equity protection. So I always go with the max drawdown because I take a very aggressive compounding approach. I basically compound every time I close positive. But in case you like to use profits as equity protection, you can go for the apps drawdown with risk, because at one point you will have this. I mean, if you enter the market on 2004, you won't have any issue. Your absolute drawdown will be this one. But if you enter the market in 2011, your max drawdown will be this one, and you're safe because you're less than the 100% of your initial investment. But sometimes it might happen that this number is 2 times the initial investment. So if you start that exact time, the account will be gone. So that's very important to take in mind. And now for example, in 2013 to 2024, we have a little less risk, but in both scenarios the risk is very controlled compared to the profits we are closing. Every profit factor is up higher than 2, and amazing, we have a very high in this case win rate, 84% average in both cycles. That's very good. The highest I got between backtesting and live was 91% or 92%, but that's insane. It's not even possible because I was using a lot of scalping logics that added a lot of volume to the total profit or profitable trades, but at the end it wasn't really reflecting in the profits, and long term could be a little bit, could mean a little bit more risk than needed, because compared to the profits that I'm closing and the possible future risk, it wasn't worth. So I took them out, and now I'm rolling with more or less between 70 and 88. My past model was around 88%, so this one is 4% less, but it's way better in the closings and everything. So now I'm gonna focus on this range 2010 to 2012, so I can manage these micro closings. As you can see, everything in general is very good because we have the very sustained drawdown with a very good profit. But what I want is to not close, especially these green spikes, we can say. That means that I'm not closing profits very smart. Just in simple words, I'm not closing very good. And we have, for example, these negative closings. I don't like them. I don't close negative. That just stop loss traders do that. So I'm a good trader, so I don't need to close negative. As you can see, even closing negative, I managed to give a very decent equity curve with economic crisis cycles. This is mainly COVID and 2011, 2008, and 2013 drops. So this is not a joke. This is a very high level investing model. So let me finish with it. Let me show you how I go from this to something better. I think I can do it today. Let's see if it's possible. And well, in this case, just put some music, let's chill and finish this model, because I'm a little bit anxious to test it because gold is breaking so much all-time highs and I'm not trading with my best model. I'm using the past model that is very good, but this is just better, a better version, so I need to test it as soon as possible. big. As you can see, well, it might seem like this is not the best backtesting session I ever had, but actually it is, because let me show you something. 170% profit, sorry, close to 3 profit factor, 13, we could say 14% absolute drawdown, a volume of almost 10k trades. You're having an expected payoff of $18 per trade or per cycle, and we are registering a 30, we could say, percent drawdown, but in reality we have a 60% because the equity at risk was 58k, so in reality it's 60%. But for a 170% in this big range, we're almost, I'm avoiding the closing of 2011 because, as you can see, here is where I'm having issues. So most likely, or what I want to do, is to balance more my logics so I can keep as much as possible this beautiful risk reward, but being able to hold this amazing, it's the drop. It's if you check November 2011, it's a big drop, a revelation after all the mess with the debt crisis. Especially they announced, USA announced that everything was okay and they can pay the debt and blah blah blah. So market reacted very fast and aggressively. As you can see here, we have the back test. So it's not clean, it's not the best, but the idea is to manage this so we can get better result, well, the best results as possible, because not every time will be this clean, but the idea is that this new mode can trade this clean, or at least give some clean results like this. I'm gonna work with 2011, 2014 range, micro from macro and macro from micro. You'll see how, and I'll process all, I'll record all the process. Stay tuned.